Pros and cons of multifamily investing. Advantages, income potential, economies of scale, diversification, professional property management, potential for appreciation, resilience during economic downturns. We talked about that one. Tax benefits, long-term wealth building. But there are some challenges. You got the management complexity. All property management companies are not made equal. It is a little bit complex on that side. With just managing a residence taking over, especially as you have a lot of moving pieces. You may be updating some of the units at the same time that you have people moving out. You may be just keeping people in leases and you're not going to increase everybody's rent and let some stay as you transfer just because you don't want to have all 50 of your residents move out at one time and now you have zero income coming in. And so you want to kind of phase those things, but you got to have a really good property management company to work with you to implement your game plan without that many perturbations in your execution and killing your cash flow. Higher initial investment. It does take money up front for down payment. But the thing what I love about it, that you can start where you're at. Maybe you need to just look at a duplex, whereas that you can use a residential loan, a VA loan, or a FHA conventional mortgage, and you can use that to buy a duplex, a triplex, or a quadplex. All the way up to 4 units is considered residential, and so you're able to get into a multi-unit property that way and become an instant landlord. And so with a low initial down payment. But as you get into the higher units, 5 units and up, that usually you're going to be looking at right now. I think the going rate is probably 30% down. Just where a lot of banks are a little bit more conservative right now. But anywhere, last year you could be anywhere from between 75, 80% for is the loan to value. And then you're on the hook for only bringing 20 to 25% as the down payment. But you also need to understand that you don't have to be on the hook to have the credit score, have the experience, or to have all the money yourself. That there's opportunities for you to look for partnerships to raise capital because there's a lot of money out there right now. We look at all the trillions of dollars that have been printed over the last couple of years. There's a lot of money in the economy that's looking for a return. And that's the thing that we need to understand. And kind of, for me, it was a limiting belief because I was like, I don't have a lot of money. But it's like, okay, how can I provide an opportunity to give a decent return to somebody who doesn't have, one, the ability to find great deals like I do, and then 2, that don't have the time or the ability to manage deals. And so therein lies the opportunity that you can provide to others. When you build up that skill set, whereas that you can find good deals or you can also manage good deals, then now that's just an asset. And now you're able to provide that service, provide that to other individuals where now you build a win-win relationship. And that's what it's all about. There are you need to look at the market dependency. I don't like certain markets. I'll tell you, I stay away from war zones. I don't do high crime areas. For me, when I start talking about the market, I like to be in an area where there's between at least 40 to 70K for the median income in that zip code. But then also I look for low crime. That I'm not really one to have to deal with those areas because they come with additional challenges with having the resident turnover, which is kind of the next challenge, but you have higher turnover in areas that have higher crime and lower income areas. And so that's just something you have to keep in the back of your mind when choosing a location. Regulations and compliance, there are regulations with the SEC, the Security Exchange Commission, that regulates, what's going on between joint ventures, and then especially on the syndication side, with you being able to stay in compliance. Property maintenance, staying on top of that as you get a larger property, you need to have your systems in place and have the proper mechanisms, whereas that your property management company can manage that fully, because it can be, if they don't have the right systems in place, it can be overbearing. And then the last thing that you want to do is be able to have people not having a really great experience in your community, at your apartment, just because you're not adhering to their needs and being able to take care of maintenance in a timely fashion. And so something that definitely can be a challenge. And then financing for beginners, we kind of talked about the money aspect, that if you try to do it alone, then yes, it can be a challenge.